How's it going, everybody? It is Dennis, and we're back with another video. And today we're talking about when to buy YieldMax ETFs, and we're doing it in presentation style. We're talking about when to buy YieldMax ETFs, when's the perfect time, how not to buy on the highs, how not to lose your value, buy at the perfect times, and keep it and make that income. Don't buy whenever, buy at the right time. That's the slogan everybody should follow when you're invested into any of these high-paying ETFs. So let's go ahead and get started. If you do not know what YieldMax ETFs are, they're high-paying dividend ETFs. I'm not going to go get much into it. There's a bunch of videos out there, including with some of mine, that explain what these ETFs do. But in general, what we're going to be focusing on are these ETFs, their dividends, and how they are structured. If you did not, or if you do or do not know, YieldMax ETFs pay on a weekly basis. There's two funds, YieldMax and YieldMax, that pay every single week from the distributions that they own from owning all of the YieldMax ETFs. And then there's Group A, Group B, Group C, and Group D, which pay every single week, but they're still monthly payers. They're just distributed on a weekly basis. That makes it a weekly paying fund setup. Of course, you have to own a fund from every single group. One from Group A, one from Group B, one from Group C, and one from Group D. If you do not, then you will not be receiving weekly dividends unless you invested into YieldMax, and that will pay you weekly, of course. But that's how they are structured. And now that you know that, how do you run the dividend reinvestment strategy? How do you invest in general into these funds, knowing the schedule, knowing how they work? Well, let's get started with the first one, which is not the best strategy. We're going to start from worst to best, in my opinion. Worst, a lot of people say, I'm going to say worst because a lot of people love this strategy, to best, in my opinion. So the worst strategy is number one, and that is automatically reinvesting the dividends or using DRIP. A lot of trading platforms like Fidelity and Robinhood allow you to use DRIP, which is you get the dividend and then you reinvest it back into ETF. Well, you not personally, the trading platform reinvests it for you back into the ETF. Now, a lot of people love this strategy. A lot of people in the dividend community love this strategy, but it just does not work for these YieldMax ETFs unless you don't want to do any work and just sit back and relax and enjoy the growth that you're getting in your dividends or the money that you're getting from your dividends. Then yes, you could use DRIP. But anyways, if you're actually using the income you earn from these dividends, you can't even use DRIP because you have to use that income, take it out, and use it somewhere, right? So if you're having DRIP on, it's going to reinvest back in, so you're not making any income. So technically, this doesn't work for these funds. DRIP just doesn't work for these funds. You want to take some of the money out to use it if that's ultimately why you're buying it for, right? If you're the person who wants to relax and make money, you can't use DRIP anyways because you got to take that money out. So DRIP doesn't work for you. DRIP doesn't work in general because the time it buys is just not that well. If you did not know, when it comes to Robinhood, which is the platform I use, you get your money on Friday. If you have DRIP enabled, that does not get reinvested until Monday. Monday, like in the morning, it's like 10ish, 11, usually it gets reinvested back in. That's terrible. Wednesday's the ex-dividend date, and we had the drop, and the dividend goes out. And then Thursday, you're missing out. Friday, you're missing out. Saturday and Sunday, we have 2 days where we have news that could come in and make the market spike on Monday morning. And then Monday, you waste out on a whole 1 to 2 hours of trading. That's terrible. You're missing out so much time to buy at the lows and have that value growth. If you take a look right here, we can see that I was doing this strategy back in 2023 when I first started investing this YieldMax ETFs, or actually 2022 is when, 2023 is when I started. But 2023 is when I was running the DRIP strategy. I was running it on Apple, GUI, and YieldMax. Of course, I didn't run it on Tesla and AMZ. Tesla and AMZ, I took out the cash and distributed because those were my large positions, and I wanted to use the income they gave me to fund the other YieldMax ETFs. But Apple, GUI, and YieldMax is the ones I was using to reinvest back into themselves using the DRIP method, and it just didn't work. I didn't see much growth. It was buying at too high of prices, honestly, which I could have done better just buying myself. But in general, DRIP method just does not work for these ETFs. If you're using this for cash, you can't even use DRIP because you have to take cash out to pay stuff, like I said. And in general, it's just the value is not there for these ETFs. This is not SCHD. This is not JEPQ. This is not your basic ETF pairs like Coca-Cola or Intel, right? This is not those type of funds, right? When they drop hard, and you're buying and you're waiting 2 to 3 days for that value to possibly go up, and you're going to miss out on it. So that's why we're going into the second strategy. And one of my I like this strategy. I think this is a good strategy. I'm learning how to do this myself. We're not learning, but I'm going into this myself, and that is buying after the ex-dividend date drop. Why do you want to buy after the ex-dividend date drop? Well, that is because if you do or do not know, these YieldMax ETFs drop when they pay out their dividends. Once they announce their dividends on Wednesday, the next day it drops. It drops, or actually that night it drops. So once the market closes, and the reason they drop is because they're gonna pay you out what they, from the value of the stock. So say we'll take a look at AMZ, right? AMZ pays you 70 cents, right? The value of is $20. Now it drops to $19.30, but the 70 cents you get back. You're gonna get the 70 cents back on Friday, but you're gonna get that from the shares you hold. So say you hold 100 shares, they give you 70 cents. You just got 70 bucks on Friday, which now you have to reinvest back in on Monday, right? Or if the fund gives you the cash on Friday, then you can reinvest on Friday. But you just missed out on Thursday and mostly Friday morning, because sometimes they pay late into Friday. So you're with the first strategy with DRIP, you're missing out those couple days. But if you're buying on ex-dividend date when it drops, so you say Thursday morning, you go ahead and buy in when it's at its low, you're able to experience growth like this. If we take a look at AMZ, we can see that if you bought right here at the yellow, at the opening on Thursday, when it's at its lowest, you could experience all this growth. That's the growth you could experience if you buy on ex-dividend day drop. Of course, this doesn't work all the time. If we take a look at Tesla, you can see if you bought on ex-dividend day drop, it will continue to go down. But that's just because the underlying went down. It's not the fault of the funds. It's because the underlying went down, and that's why you have to be bullish on these funds before you even decide to buy any of these funds. If it's on ex-dividend day drop or whatever, don't buy into these funds if you're not bullish on them. Please don't buy these funds if you do not believe in their underlying, at least for the single stock ETFs, okay? If we take a look at Misty, which is a fan favorite currently because they pay high dividends, if you bought here, you would have all this ability to grow, and of course later it dipped down, but you have this ability to grow with Misty, right? So that's why buying on ex-dividend day drop is good. But you might be asking, how will I buy on ex-dividend day drop if I don't get my dividends until Friday, if I decide to take it out in cash? Well, that is when you utilize the weekly paying method that YieldMax ETF has set up for you, the distribution schedule they have set up for you. That's how you utilize it, right? Say you get a dividend on Group A. That's your first ever dividend from YieldMax ETF. You get it on Friday. You receive your nice dollars. Do not go and buy the Group A ETFs. Do not buy Group A ETFs. Hold that cash until next Wednesday and buy once it dips for Group B. Buy into Group B and then go ahead and buy their ex-dividend date. Then Group B will go ahead and buy into Group C. Group C will buy into Group D, and then you keep going and going and going and buying at the lows. That's how you utilize it. Do not take Group A's dividends and buy Group A. Unless you see a buying opportunity, like there's lows, and you really think that underlying is going to go up, do not buy back into Group A, because you're going to lose on those couple days where you have that growth, and you're going to buy in this top part, but you missed out on all of this, right? So hold on to the dividends, buy Group B's. Group B's buys Group C, and Group C buys Group D. And you know what's even better? If you own YieldMax, YieldMax pays weekly. If you own YieldMax, that also pays weekly. Take YieldMax's and YieldMax dividends and buy Group A, Group B, Group C, Group D. Have YieldMax fund the rest of your funds. You don't have to take Group A's dividend and put it to Group B. You can just take YieldMax, and YieldMax buys Group A. YieldMax buys Group B. YieldMax buys Group C, and then Group D. YieldMax funds the rest of all your funds, right? And that's the great part about it, right? That's how you can utilize this distribution schedule that YieldMax ETF has created for us. That is how you buy these ETFs when you're getting your distributions, or if you're even just buying for the first time into any of these funds. Wait until the distribution date, or wait until the perfect buying opportunity. And talking about perfect buying opportunity, of course, in the market, there's nothing perfect. You can't time stuff, and just how it works, right? Market goes up, brr. Market goes down, brr. Right? Like, the money printer prints, it goes up. Money printer stops printing, it goes down, right? It's just how the market works, all right? So you can't time stuff. That's not how it works. There's no magic wand to where you're the best all around and you're not a magician, right? Markets are just markets, right? It's people's emotions. So third strategy of how to trade these funds is buying the underlying 50, buying the underlying 50 inner 200-day moving average, okay? This is, in my opinion, not a financial advice. the best strategy, and this is the strategy that I've been implementing into my YieldMax ETFs buying. When I'm buying in, when I'm deciding to reinvest the dividends, this is how I'm doing it. I'm using strategy 2 and I'm using strategy 3, and I'm getting great results to where I'm able to grow. And I'm going to explain more into it, okay? Simple. Go on Yahoo Finance. You don't need some nice tech-savvy application or use Robinhood's new application that they developed. Yahoo Finance. Go on the chart. Go to the ETF you want. Go 3 months. Go to your moving averages and look at your moving averages. Best thing, go to year to date. Year to date is even better. Go to 50 moving average, put 200 moving average, and you get charts like this. Of course, I use Robinhood because nice, pretty colors, and it's dark, and I like the vibe of it. But if we take a look right here at NVIDIA, we can see that's the underlying of NVIDIA, the ETF that everybody loves, right? If we look at NVIDIA, you can see, look at this. What does it say? Buy. It says buy. And this is buy. Why does it say buy in yellow there? Well, and with a blue circle around it, like someone's trying to sell you something. Well, the reason it says that is because that is below the 50-day moving average. That is when you should be buying into NVIDIA. You should be buying NVIDIA when it's below the 50-day moving average, not when it's up here, when it's not up here, and then you have this whole trend downward, so NVIDIA goes down, plus you're getting dividends in that time frame. So you're going like this, and then you're dipping like this, because it continues to pay you your dividends, and then you go on Reddit and you go, oh my god, I'm losing all my money. These things are a scam. Well, if you bought up here and you're trending all the way down here, of course it's a scam, because you didn't buy here, or you didn't wait and buy here, or buy here when it's under the 50-day moving average, right? You didn't wait to buy an ex-dividend date. You saw something nice on internet, and gotta say, it's not only the traders that you see on Reddit posting this, the personal traders, it's the YouTubers, it's the social media influencers saying, buy whenever. Guys, Misty just paid $4, buy Misty. NVIDIA just paid $3, buy NVIDIA. No. Buy when it's cheap, buy when it's low. Why would you want to buy a car when it's $250 when you could wait a little bit and pay for $50 or $100, right? Half the price, more than half the price. Why would you do that? When you could just buy here, have all this growth, and while it grows, you're getting dividends. If the traders are trading well, of course, it depends on the ETF, the YieldMax crew and their managers. If they're able to trade well and capture all this growth on the upside and deliver you your dividends, you'll have something like NVIDIA. You have something NVIDIA. All the people who are bragging about NVIDIA, they all bought here. They didn't buy here. They bought here, right? That's why they're getting that great gains and the great dividends, right? Same if we look at Apple. I trade Apple personally, and see this right here was a whole couple months of buying opportunity right there. All of them were under the 50 and the 200-day moving average. And guess what happened? If we take a look right there at the end of the buying opportunity, what happened once it crossed the 200-day and the 50-day moving average? It went all the way up. And when it was going all the way up, you get dividends and you get some value growth, assuming that they're able to trade well to capture some of that value growth. Okay? And over here, we have some more buying opportunities under the 50-day moving average. We're actually right now currently in a buying opportunity for Apple. I don't know how it is now since, we had the Trump election and the stock market went brr, and everything went up, right? So I don't know how it is currently, but at the time of taking the screenshot, it was a buying opportunity for Apple because the underlying Apple was under the 50-day moving average. And I personally am putting this into my own trading. If we take a look right here, I was buying Google or GUI up like crazy. Why was I buying GUI like crazy? Well, if we take over here, I didn't buy here. I was a little too early to buy here, but I did buy in this whole area right here where we had huge time to buy Google or GUI because look, we were under the 50-day and we were under the 200 right here when we had this little V. We were under the 200-day moving average, and I was buying into GUI because it was below not only the 50 but the 200-day moving average. And when we take a look over here, you can see first I bought starting August 8. I started buying GUI at 113, 158, 200, 237, 305, 331. I got a dividend for 100, put in 106 and $152 to end it off in September 23rd, putting that into GUI. That was my buying streak when Google, the underlying, was below the 50 and 200-day moving average. If you have cash laying on the side, don't just buy in whenever. Wait for those opportunities. Wait for the ex-dividend date and wait for the 50 and 200 day moving average for the stock to be under those averages to buy into the ETFs you want. Track the underlyings. Like I said, you have to be active with these funds. You cannot just sit back and relax. These are risky funds, especially if you're trading risky stocks like Tesla, Nvidia, MSTR. You have to track them. Track the underlying. You have a list of all your YieldMax ETFs. Have a list of all the underlyings that they own, so you could track what's going on with them. You see it dipping, you see it going under the 50, 200 day averaging, buy. You see the YieldMax ETFs have their ex-dividend date, buy. Right? Those are the times you have to buy. Don't just buy when a YouTuber says, I'm buying all into Misty, I'm buying all into Ulti, just because they're buying. Don't follow people like that. Make the smart decisions. Do your research. Don't trust people online. Don't even trust me. When you take this video, take it with a grain of salt, right? I'm not telling you this you should follow this by heart, but maybe you could learn something from it. Maybe you decide this might actually be a good strategy, right? I'm not telling you to buy stocks. I'm not telling you to buy ETFs. I'm just giving you something that I follow myself with evidence to back it up of I'm purchasing, I'm following it, and I'm going to show you right now how it's ending up to be, right? So before we even get to that, how do I use these strategies? Well, I don't use the strategy number one. I don't use it. The reason I don't use it is because YieldMax ETFs are just too volatile and move too much for me to be able to use drip like on SCHD or on Coca-Cola or Intel and all the basic dividend paying ETFs and stocks that people love and know and use drip on. I use strategy 2 and I use strategy 3 for my trades when it comes to YieldMax ETFs. I buy on those dips and I buy when they're under the 50 and 200 day moving average, as I have shown to you guys. Okay, that is what I do. And because I have been able to do that, and because I've been able to buy on those lows and buy when they're under the 50 and 200 day move average, I've just been able to grow so much more. I've been able to grow like I've never been able before. Of course, I have to say, I have to make it clear, I have option income coming in as well. I have outside income coming into the portfolio as well. So that money is being funneled in. It is being funneled into dividends and increasing it as well. But those dividend payments and that income coming in from the new weekly payment arrangement that they have has increased my ability to grow my dividend ETFs on YieldMax ETF by a dramatic amount. And just utilizing these buy periods of under the 50, 200 day move average, utilizing the buy periods of being down on ex-dividend date has allowed me to grow my portfolio with YieldMax ETFs and grow the dividends I earn. Okay? Once again, not financial advice. I have to make it clear because too many people trust people on social media. I'm just here to demonstrate what I do. I'm not telling you to do this. I'm just demonstrating what I do. Okay? And just first of all, even before you buy these funds, if you're new and you've never heard about YieldMax ETFs and you want to get into it and you want to learn when to buy ETFs that you're bullish in. You have Tesla. Are you bullish on the underlying Tesla? If you're not, don't buy it, right? Are you bullish on, let's say, what is it, Apple, right? Are you bullish on Apple? Then you should buy Apple, right? If you want the dividends, right, and you want some of the growth, because, the new perspectives that YieldMax ETF has with the ability to capture some growth, then buy Apple if you think Apple could grow long term, right? Apple's actually a great, Google and Apple and Amazon are great investments to do when it comes to YieldMax ETF. Not financial advice, I gotta say it all the time, but they're great investments to do just because they do trend upwards on a stable graph, right? They're stable when it comes to their growth, okay? They're stable. We can take a look right here. If we look at Google, look at that. That's stable growth right there. We have dips, but there is stable growth, unlike Tesla, which bounces up and down and bounces up and down. But because it bounces up and down, it offers you high dividends. That's the reason you pay either for high dividends or you pay for stable value in your ETF, okay? So that's what I do, right? I buy on ex-dividend date or 1 day post ex-dividend date, right? The morning of the next day on 9:30. And I buy under the 50 and 200 day moving average. Of course, I use some drip, not for YieldMax ETFs. I use it for QDT and other round hill ETFs, but this is not what you guys are for. You guys want to see the evidence of this working, right? You guys want to see this working on a scale of a portfolio. If it's small, if it's large, my portfolio is not that large, but maybe this could be relevant to some of you who don't have large portfolios. You just want to see this actually working and see someone who's actually utilizing one of the strategies they talk about, okay? Therefore, this is the fund, or these are the funds I own, and this is the income I've been earning and the amount of growth I've been having month after month, dividend after dividend, using the strategy I've been using, okay? If we take a look over here, we can see these are the totals for my months. We can see that they were growing, sure. We had $491, $442, $468, $485, right? It was staying stable around the $400 mark. And then what happened? I started buying after ex-dividend date, right? Started utilizing that. Then we had $638, $682, $771. We're having some growth. If we look over here on the right, we can see we have 5% growth, 3% growth, 31% growth. I dumped a lot of money. I do have to be fair. Just to let you guys know, I dumped a lot of money into the funds during that time. But then we had 6% growth, 13% growth, 8% growth, down 0.86, and now 30.63% growth. That is after we switched over to weekly paying strategies. That's the first month we've had from weekly paying strategies. I was able to earn $1,083.44 from YieldMax ETFs. That's October. It was the first month we ever had of a full-scale dividend payment structure of a weekly basis, right? And I was able to earn $1,083.44. And you know how I did that? I took Group A's dividends, put it into, of course, I didn't put it into Group B because Group B, I don't have anything. I put it into Group C. Group C, put it into Group D. And while I was doing that, I was also taking YieldMax and throwing YieldMax into Group A, Group B, Group C, Group D. Sprinkling a little bit everywhere. And when you sprinkle it a little bit everywhere, everything grows together. It's like a plant, right? You sprinkle a little bit of water there, you sprinkle a little bit of fertilizer there, and everything grows together, up and up and up, and you get those little fruits of your labor, and you get that $1,083.44, and you get that 30.63% growth from the month before. And guess what? Next month, it should be more, right? It could be less, of course, depends on what the YieldMax ETF gods and the managers decide to pay out for the end of this month, right? Group B, I don't have anything like I mentioned before, but Group C and Group D, if they decide to pay out good amounts, it will probably be above that $1,083 that I had in October, because I continue to sprinkle into every single group, A, B, C, and D, and into YieldMax, little by little, grow, and it compounds on a weekly amount, okay? That is the evidence. You could pause and you could take a look at all the funds separately from Tesla, AMZ, Apple, GUI right behind me. I'll move to the side, and YieldMax over here. You could look at all these funds. You can see how much they've grown in share count, how much they've grown in payments. You can even look at Tesla, right? Everybody was saying Tesla, that's it, it's done for Tesla. They had a reverse split. They're not paying that much. But look, you can take a look. Look at that, 343 to 262 before reverse split. We had a reverse split, 262, 227, 235, 223. It's not looking too good, right? Funds going down, dividends are going down. Oh, wait. 355, 351, 308, 426, 243 for a month of October, of course. I don't know what happened this month or last month of October, but hey, listen, 240, or sorry, that's for November actually. I don't know what happened for this month, 243, 243, but still, we're having that growth continue and having to have that consistent income. And guess what? That's what taking out 50% of Tesla and tossing into all the different funds, sprinkling it to all the different funds, and I was still able to have dividend growth and stay somewhat stable with my dividends. What happened? I thought Tesla is a negative, right? I thought Tesla is losing after the reverse split. It is not. You just have to have a strategy for everything. Don't just buy in, and when it dips, start crying. Buy at the lows. Buy at the lows, buy for cheap. Don't put everything back in if you don't want to. Put 50%, put 25%, at least you just got to put a little bit back in to have that growth, especially if the ETF is going down like Tesla was because of Tesla. Put a little back in. Take the rest, put it somewhere else safe if you want to. These funds are probably not going anywhere anytime soon unless we have some crazy event, right? And that goes for all these other funds I own. We have AMZ, we have Apple. AMZ went from just paying $71 to me to paying $224 in October. We have Apple that went paying from $62 to $73, but of course, I'm a little bit slower on Apple when it comes to the reinvesting back into it. We had GUI that went from paying $13.79 to paying $121.05 for the month of November, right? And then we have YieldMax, which is absolutely doing amazing because I've been putting a lot of my funds into YieldMax just because it is weekly now. And that went from paying $14.70 to paying to $246.02 in October, okay? That is that is my experience with using those methods, okay? As soon as I started switching into those methods, so ex-dividend date and following the 50 and 200-day moving average, I experienced growth like this, all right? 30% growth month over month, 8%, 13% growth month over month from dividends alone. Of course, I have to say, this is not financial advice. You could just listen to me, just of my experience, and if you don't want to implement it, don't implement it. If you think this is stupid, then it is stupid, okay? But that's just the experience I've had. This is the evidence I have to show of it working. And like I mentioned before, I have income coming from the outside. I'm, of course, throwing that money into these funds. I also have income coming from options, which I'm throwing into these funds, and vice versa. I take the dividends, I throw into options. I take the option income, throw into dividends, and vice versa. I loop it all around and round and round, around the world, right? That's just how it is, okay? And that's my experience. So I hope you guys enjoyed the video. If you're new to YieldMax ETFs, remember, buy the stuff that you're bullish on, the underlying that you're bullish on, buy those corresponding ETFs. Do not buy something just to chase the yield. Do not buy at the highs. Buy at the lows and hold. Buy at the lows and hold, okay? Don't buy and sell. This is not a stock. Buy it and hold. Take those dividends. Earn those dividends and then buy low even lower and buy even lower, okay? When you get the chance, all right? So I hope you guys have had some fun watching. I hope you guys learned something new. Maybe decide to change your strategy a little bit. Of course, not financial advice. I have to make that clear all the time because people think this is financial advice. It's not, okay? It's my own experience. This is my own strategy. Follow it if you want to. It's up to you, right? Take a little bit of notes if you want to. It's up to you. But that's just what I'm doing, okay? So thank you so much, everybody, for watching. If you're new to YieldMax ETFs, there's a bunch more videos on YouTube you guys could watch. You can watch my videos. You can watch other people's videos on what these funds are. And if you're not new to YieldMax ETF, I hope you guys saw a different viewpoint to how you could trade these YieldMax ETFs and how you could invest back into them or invest newly invest into these ETFs if you're trying to buy a new ETF. When's the perfect time to buy it? Of course, we never will know. Investing is tricky, but at least you can follow some kind of strategy to it, okay? So thank you so much for watching. I'll see you guys next week for next week's video, whatever that might be. It's a secret. But once again, thank you so much for watching. Just remember to leave a like, subscribe, send this video out to someone maybe who's not into YieldMax ETFs, who's new to the space, or in general might need to learn a few things, or look at some other people's experiences when it comes to YieldMax ETFs. Thank you so much, everybody, for watching, and I'll see you guys next week. Peace.